Hi, Jerry.
Hi, Kim. How are you today?
I'm well, thanks. How about you?
Pretty good.
Good. Oh, happy May 30th because it feels like July 15th here. How about where you are?
It's warm, but I've been inside in the AC, so
uh,
I don't
uh,
know. Yeah.
yeah, well, it's very warm here, but anyway, off track. Listen, thank you for meeting with me today to do a podcast because I am excited about this topic that we're going to talk about. It's very popular these days, and it certainly lends itself very nicely to the whole mortgage note investing vehicle. And so I think it'd be a good idea to have something like this on our channel for people to reference and get some guidance. And with that, I'd like to say that we are not attorneys and we are not CPAs or financial planners, but we share on a regular basis, our knowledge and expertise in this part of real estate investing. And if there are any questions, we just want to be able to, be able to invite our listeners to, tap into what we're talking about, ask some questions, and then, of course, redirect to the appropriate professional to give that final guidance in what we're doing. So, with that, Jerry, the topic, as we had talked about, was going to be about private lending.
Mhm.
And I know you have a lot to talk about this. I'm excited about it. So, I'm going to go ahead and let you get started, and I'm going to do my best to be quiet and sit on my hands over here and not interrupt.
Please interrupt. It's not- I don't know if I can talk for that long.
Okay.
Um, anyway, yeah, we're going to talk today about private lending. And just at a high level, private lending is where an individual is loaning money to another individual or another a business or something like that. It's a lot. I won't say it's a less formal process, but the way that it's done is less formal than you'd have at a traditional lending institution.
Right.
So
Right.
essentially, private lending is everything outside of a traditional institution,
Hmm.
like one of your big banks, an insurance company, credit union, or someone like that.
Right. Right.
So, in this world, you are, like I said, lending money directly to a borrower. Um, in our case, we're lending money for secured assets. Um, we're not trying to just go out and willy nilly lend money to some guy on the street. You do have to have something of substance for us to be able to lend to.
Right. Right.
And we like lending on real estate because it is a hard asset, um, and it offers great collateral. Um, but there are other things people have been known to lend on. They lend on equipment. They'll lend on automobiles, motor vehicles, mobile home, or RVs, things of that sort. But we lend on collateral. We lend on the collateral of real estate, whether that's a mobile home, whether that's a single family home, whether that's a multi-unit piece of property. That's kind of our sweet space.
Right. Right.
One of the things I know you've asked me in the past, Kim, is like, how did I get into this? I
Yeah.
started out in real estate, doing real estate many, many years ago. And, over the last, decade or so, really kind of honed in on it a little bit more. And as I was doing, typical landlord type activities, I'd buy houses, rent them out, whatever. Occasionally a tenant would come back and say, I like this house. Can you, can you sell it to me? And, the first time someone said that, you kind of scratch your head and you go, well, you need to go talk to a bank. and, and you find out that, well, they don't qualify for the bank. We'll talk a little bit about that later.
Right.
And it was easier for me just to finance it, do the paperwork, the mortgage and whatever, and then have them pay me, but they take care of all the maintenance and things like that.
Right.
Way back
Right.
when I first got into the real estate business, I actually bought a lot of houses that way, where it was
Right.
seller financed. So
Right.
one of the terms that people are going to be that are you may be more familiar with is seller financing. That's the same thing as private lending.
Right.
The difference, though, is that when I'm financing something that I don't own, obviously it's not seller financing, it is private lending.
Right, right. And it's interesting how, there are a lot of times that situations will present itself where private lending just kind of falls in your lap, if you will.
Hmm.
Many, many, many years ago, I did have the experience of someone selling a house to me, and they were my lender, right?
Yeah,
Which helped me at that time because there was transitioning going on there. But no one thought of it as private lending. It was a an agreed upon arrangement between me and the seller, right?
yeah,
Um, and then here of late, in the last, I guess, a couple of years or so, going into real estate, I borrowed with hard money lending initially, not knowing about the advantage as well as how accessible it is to find a private lender to help with gap funding, right?
yeah,
Um, which is also another opportunity to engage a private lender. So,
true.
this can go on and on and on in regards to, the different ways you can get a private lender involved.
Yeah.
That's to the advantage of the investor and what they're doing with, especially, with real estate. So,
Yeah,
I'm not
absolutely.
gonna take over. I said I made promise I was gonna take over. So
Well, no worries. But you bring up a really good point. Thinking about the situation that you're in, one of the reasons we have private lending is because it solves a problem.
Mhm,
In your case, you had someone that was trying to sell a home
mhm,
and you were trying to buy a home.
right,
And because of timing and circumstances, you may not have been able to get traditional financing. And they may not have needed, obviously, they didn't need a lump of cash all at once.
right.
And, if they're willing to take the money over time, problem solved for two different people. And
Very
that
good.
works
Yeah.
out well for a lot of folks. So, and that's part of the reason, and that's a really good segue into, why do investors get involved in this space is because of market conditions. You have problems that need to be solved,
Right.
and
That's a good
private
way.
lenders are great at being able to solve them. One of the reasons for that, particularly nowadays, is that the banks are extremely restrictive in their lending practices.
Mhm.
And, people that were able to get loans 15 years ago, 20 years ago, can't qualify today. And it's because the lending requirements have gotten so restrictive that, you know, if you don't have a traditional job at a Fortune 500 for the last 3 years, forget it.
Right. Yeah.
We're just not going to lend you any money. So because they've narrowed their lending criteria, things like proof of income, and not just do you make income, but specifically how you have to prove that you make income, are things that can knock people out. The type of income you have. If you're highly commission based, like a real estate agent, or you're self-employed, a contractor, consultant, a gig worker, those are folks that the traditional banks will not, or the traditional lenders kind of look down on. And you may have an 800 FICO score, but they'll say no.
Yeah. It's true.
So that's part of the reason for the rise in the private lending world.
Yeah.
The other thing that, as a private lender, that happens, and I see this all the time, and I'll talk about an example about that in a second, is the speed of decision making.
That's right.
You know,
Absolutely.
yeah, if you think about um, working with the bank, if you decide you're going to go out and get a mortgage, they tell you up front, 45 days. And that's before they start coming up with the random questions. you know, Questions that I've always wondered, what does that have to do with getting a mortgage?
Right.
So what color shirt do you like? That kind of thing. In the last 2 weeks, I have purchased or invested in some real estate where The borrower called yesterday, literally. The borrower called up and said, "Hey, I'm interested in doing a deal with you." And we went back and forth for about 20 minutes. And all right, we're going to do a deal. And I think it's great. I'm getting a 15% interest. He thinks it's great because he's taking cash out of one property. It's going to allow him to invest in another property.
Right. Right.
And I know the borrower. I've known him for at least 7-8 years. I know he's a very serious real estate investor. He owns hundreds of properties here in town, and I know I'm going to get my money. Also, we've gone back, we've done our due diligence, we've looked at the property. We now got to run the title and all that kind of stuff. But you can't. First of all, yesterday was a holiday.
Yeah.
Banks are closed on holidays.
Banks are closed.
A bank will have will give you writer's cramp filling out the application. There's no application. It was a text message.
Oh, wow.
Can you do this deal? Sure. And let me go take a look at the house. Got one of my guys go take a look at the house. That guy gave me a thumbs up. At the same time, and we'll talk about that also a little later, had another investor who had money who was looking for opportunities. And I basically was a matchmaker.
Right.
Yeah.
And
Yeah.
I was
Literally.
going to say private lending has a lot to do with matchmaking because
Yeah.
they are looking, private lenders look for the opportunities to be able to lend for the
Yeah.
purposes of their own return, right?
Yeah.
And then you find that there's someone that needs that lending opportunity, right?
Yeah.
So it is a lot of like, matchmaking in regards to bringing about the solution that's needed for transactions to take place.
Absolutely. And literally that's what happened. So when I talk about speed of decision making, in a 20-minute period, my borrower was able to determine that he could get the cash he needed to do what he wanted to do. He knew that I was going to be able to fund it. And I literally, we had the cash. And half an hour later, another person came up and said, "Hey, I got some money. Got any deals?" So that worked out well. You don't see that at a bank. Another example, last week, I think it was like it was a week and a half ago, I got a phone call from another one of the folks that we have done business with in the past. He said, "Hey, we got this deal. Here it is. Here's how much the interest is. Do you want it?" And it's like, "Well, maybe." You go, "Well, we want to close it really quickly." So I looked at it, ran some numbers, looked at the pictures of the property, said, "Yeah, we'll do it." And from the time they called me to the time the funds were wired was less than 10 days.
10 days.
10 days.
They're still looking for documentation from you from the banks.
Well,
10 days.
at the bank, after 10 days, they're trying to come up with another set of documents for you to go. Do you have your mom's birth certificate?
Right, your mom.
Hey, mom, what does mom have to do with it? Well,
Yeah,
we just want to know that she was born.
right.
Okay.
Yeah.
Whatever, so that's the kind of thing that makes the private lending world so much better. And again, I joke about, the random question generator. And I've had some crazy questions that have been asked by, your traditional banks. But our lending process, when we're dealing with the borrower, is pretty straightforward.
Right.
I want to know the quality of the collateral. Is it you've heard me say this before, is it a pretty house?
Yeah.
I want to
Right.
know. I want to know the borrower. So in both of these cases, these are borrowers that I've known for a while and I'm comfortable with. I know that, that second borrower, they've borrowed money from me before, and I know on the 15th of the month, I can actually on the 14th, I'm going to get an email from their software package saying that the money is deposited in your account tomorrow. I look at my bank and bing, there's money there. So
Yeah.
I don't have to worry about it. I don't have to chase people down, whatever.
But
So
to your point, though, I think that's something that we should stress that even though there is still paperwork involved and there are, assurances that are still made, but the whole know and like and trust your borrower or the lender, because it is both ways, right?
yeah,
Is a big factor on the success of the lending opportunity.
sure.
Because, when one incident goes right and goes according to that which has been discussed and expected, it gets easier and easier. And you can trust that which is being, presented to you for the purpose of, investing or um, lending money, right? Like you got a thumbs up on the property, right? And that was what you needed. Yeah, I know how you feel about pretty houses, right? So,
Yeah,
so it must have been pretty. That's all I have to say. But
that's
again,
what.
that relationship fosters even a more readily opportunity to transact when you have those relationships in place.
Yeah, yeah, absolutely, absolutely. And what you start to find is that the folks that are the borrowers in this world, once they have a lender that they're confident in, it's I'm not going to say yes and then come back and say, well, maybe, because they're business people. They have commitments that they've made, and they're making a decision based on my committing to
Right.
allow them to commit to do what they
Right.
said they were going to do. So
Yeah.
if there's a chain there, and everybody's trying to make sure that we're all following that chain.
Right. Right.
So the other thing that we look at, again, when I say a straightforward lending process, we look at the quality of the paper. Is all the
Right.
paperwork together? Um, is the title clear? And are there any issues on the title that we should be aware of? We look at the neighborhood and the locale. Is it a thriving area or a declining area? Those are important to us. Payment stream. In the case of these two deals, I know the borrowers. I'm confident that the payment streams are going to be there. But there are other deals that we've looked at, that we do look at, and we want to make sure that you have 12, 24, 36 months of on-time, regular, consistent payments on this loan or on this note. So, because we want to make, we're not a charity.
No. No.
We do want to make money, and that's the whole purpose of what we do.
And then you find that there are private lenders that have a very narrow criteria, right? They
Yep.
only provide lending on this criterion, right?
Yeah.
So that they know what to expect. They can do it in their sleep basically. And
Yeah.
because you get to know them, you know what to provide them in regard to what is going to be accepted in that relationship for the lending opportunity. So
Absolutely.
um and there's so many. That's the other thing. It's not something that you wouldn't be able to find a private lender, right? There are many private lenders out there,
Sure. Sure.
because it tends to be a win-win situation under most circumstances.
Yeah.
And so
Absolutely.
and I think that's what's keeping the whole industry moving, right? and
Mhm.
and not getting stale and stuck, if you will,
Yeah.
because we do have that platform to invest and sell and buy, lend, etc., at a different level.
Yeah, absolutely, absolutely. And as you're saying that, one of the things that came into my head is, you know, for those folks that are listening, how do you participate in this space? So we've talked
Hmm.
about it. Um, there are some advantages, and I'll talk a little bit more about that in a second. But how do you participate? I started when after doing the RT, the rent to owns, and I started investing in other in notes and other lending opportunities. I did that out of one of my tax advantaged accounts. I have
Hmm.
a solo 401k and I invest in that.
Right.
The rationale there is that it's patient. It's really patient money.
Right.
It's not money that I need to, to pay the light bill or, to eat with. It's going to be sitting there for a while, and I wanted to get a return on that money. So
Right. Right.
I invested in that account. The monies flow back into that account. Any capital gains flow back into that account. And I basically worry about or have to deal with the taxes down the road whenever I pull the capital or the cash out of that account. So that
Exactly.
works out pretty well.
Yep.
And,
And
it helps
that
build the account.
right. And it's an opportunity to let your money be working for you, right? Instead of
Yeah.
just sitting there.
Yeah.
And again, that would be an opportunity to really, discuss with the professional that's involved, that if you were interested in doing that, as far as redirecting monies from out of your tax advantage accounts.
Yeah.
But, I
Sure.
can see and know how that works. And it is something that should probably be leveraged more often, um, because it does help a lot.
Yeah. Yeah. Another thing to talk about is, where do you find private lenders,
Mm,
and who makes a good private lender? It's people that are looking for a better return, a
yes,
better return than they would be getting on their their cash otherwise.
right,
Today, if I have cash lying around, I can put it in a CD and get 3-4%. And Wells Fargo says, hey, that's a great thing. And they got this big sign up that says, hey, you can get 3%. Not happening.
look at that.
So,
They spend a lot of money on those billboards that say, 3-4%. And I'm thinking, why?
yeah,
But go ahead. I'm
yeah.
sorry.
I don't know, but yeah, when I go into the bank, it's like, hey, would you like to get a CD? No. So if you're looking for a better return, this is an opportunity to do that. Um, if you're looking for something that has a risk adjusted return that works for you, this is an area that does that. If you're looking at being a bank, being to be the bank for someone else, it's a great place to do that. I like it because it gives me, again, above average returns. It gives me a steady return. So, money, some people call it mailbox money, but on the first of the month, the fifth of the month, whatever date you have contracted with your borrower with, you're going to get your check, or you're going to get your
Right,
wire, or you're going to get your ACH. So the money
right,
just appears in your bank. So that's a good thing. And then, for us, we work with borrowers. We also work with investors. Folks that are, like I said, looking for a little bit better return. Um, and we will work with them on a number of deals. And as I said before, we try to work with the same folks all the time, because we're building trust.
right,
For the folks that are investing with us, they want to know that we're not coming up and doing crazy deals. The folks that are borrowing from us or selling us a note, they want to know that if we make a commitment, that we can live with the commitment.
right, right.
And not that we will say yes to every deal. As you know, we had one a week or so ago where I sent the money to the bank, to the escrow company to do the deal, and at 5 o'clock, my lawyer said, "No, you can't do this deal." Seller was not happy, but hey, my investors were ecstatic.
Right,
So
right.
that kind of works for us. So just to say that, we will work with a lot of investors. And for those that are curious about what we've talked about, curious about private lending, um, curious about being in this space, want to know more, please give us a call. And get on my calendar, get on Kim's calendar, and we can talk you through, how do we do this? What does it look like? How do we know for sure that our investment is secure? What
Right.
actions do we take? What do how do we put our contracts together to make sure that we are taking risk, but not taking an unusually large risk?
And it
So
always helps to see real life situations, like what
yeah,
is the process, right? To see what
yeah,
that looks like and
yeah,
how everyone is secure in the process when you do it. Again, we are not the attorneys and we are not the planners or anything like that. But if you're an investor and you have a potential private lender and before you move forward with discussions, right? Or how
yeah,
to approach even, right?
yeah,
It helps to understand what the scope of it all looks like, right?
yeah,
And how it is a win-win situation for
yeah,
everyone that's
yeah.
involved, right? And it makes you a better person as far as the borrower is concerned to approach the lender, to be
Mhm.
able to be confident in that which you're bringing forth for the purposes of a transaction with the private lender.
Absolutely, absolutely. So, um, kind of tie it all together here. We work with both borrowers and lenders or investors to be able to put packages together to allow folks to do the kinds of things that they want to do, primarily in the real estate space. So for folks that are buying properties, as you mentioned, we'll do gap financing and things of that sort. All of those kinds of things to help keep the real estate market moving, I guess.
Right, right. No, movement is key, because like you said, sometimes people lose the property that they're interested waiting on, right?
Yeah,
The financial institution,
yeah,
to
and,
just, do their job.
yeah.
You know,
And that's a
don't get
great
me
point.
started. I mean, I
Yeah,
want to tell you a funny situation. I'm not going to name any names, but when you're talking about following the rules and regulations with the traditional institutions and stuff like that, um, there are some really great jobs out there that don't meet the criteria.
true.
Uh, this person has an 840 FICO score.
I know
They've
what
been,
you're talking about.
I
Yeah,
know, right? Yeah,
yeah.
yeah. They've been working in this capacity for 23 years, but they're a longshoreman. And in being a longshoreman, they they work by the ship, and so there is no one W-2 that aligns with the last 12 months. There are several W-2s that
So
align with
basically, they get a W-2 for every ship that they're working on.
every ship they worked on. So,
So they're getting
that
that.
doesn't meet the framework of, but, they more than qualified if they did just get one,
Yeah,
so there was some help that was initiated that helped in regards to being for the transaction to take place. But that's one of those situations where, uh, no matter how you look at it,
yeah,
it's not going to fit the criteria.
no, yeah, and that's what I mean by the boxes that they're working that the lenders are dealing with now have gotten so stringent that back when when I was I'm going to say I was a kid when I first graduated from college, the bankers were working in the branches
Yeah.
and they would talk to you and they would make lending decisions there because they could. And for someone with, if you had an 840 FICO score, you've been working for 20 years, it's a no-brainer. But now it is no longer a no-brainer because they specifically have to have, that
2 years.
paycheck. And, you know, you got to be working there for 24 months.
Ah,
And
anyway.
yeah, it doesn't make sense. And because there are a lot of folks that can't meet that criteria that, you know, can demonstrate they have the income and, like they've had the income for years, for decades. But I can't, uh, I, I have
And,
yeah, yeah, yeah,
we were able to help without question, right? We were,
yeah, yeah,
this was a no-brainer, but
yeah,
it just demonstrates, the limitations, right, that the
yeah,
traditional institutions and whereby private lending can be the answer to a lot of situations that, don't make sense, that
Yeah,
kind of thing.
yeah.
So,
Um, again, we'll wrap up with one final my crazy story. One of the folks that I lent money to had a terrible FICO score, and because I've been in this business, I can read credit reports really, really well. They had a bad FICO score, not because they were a deadbeat or that they don't pay their bills. They didn't have credit.
oh, that's right. Yeah, yeah.
So, there are a lot of folks out there that think, well, I only need one credit card.
Right, right.
And, it doesn't really have to be more than $800. And they never ask for an increase. And so their FICO score is really low. The other thing is that I've seen, because I read lots of credit reports, if you have a mortgage, you always have a higher FICO score.
Right.
This person didn't have a mortgage, had a couple of credit cards with low balances, and every time they charge anything, get a tank of gas, their debt to income ratio exploded and their FICO score goes down.
Right,
I look
right.
at the credit report and I go, this is a 760 FICO score masquerading as a 610.
Yeah, yeah.
I'm going to do this deal all day long.
Right, right.
Did the deal, and it's a borrower that thinks that if they pay me on time, it's late.
Yeah.
So, you know, I
And
still,
pays more, right? Pays more than what's required.
yeah, it's sort of like, well, once I got a phone call, it's like, I'm going to be late this month. Well, what does that mean? Well, I'm going to pay on the first. Okay.
No, it's true.
Like that kind of late.
The way that the credit industry runs, right? And
Yeah,
what is acceptable and not acceptable. There's a real balance, right? And if you
yeah,
don't know what that is, you might be doing all the things right that are hurting your credit score, you
true,
know?
true.
And then there are those who have figured out what that formula is, what that algorithm is, what that time of the month is, et cetera, et cetera. And, they play the game.
Yeah,
So, that too is a whole nother podcast. We can get
yeah,
into that as well.
yeah.
But
I think we we can go on for days with these stories.
yeah, yeah.
So,
But you see it all, but what we are grateful for is that you've said it before that we should think of ourselves as providing solutions for people who need finance and support, and for especially for investing. So,
yeah,
um,
absolutely.
yeah. Well, this was good. This was fun. Did we cover everything? I can't remember.
Yep,
Um,
we did.
yeah.
We did.
Okay. Well, again, certainly, if our viewers, if you have any questions, or if this is something you would like to learn more about, or hear more about our stories that we have to tell, please go to our website, firstshieldfinancial.com. You can also schedule time with either of us there, to be able to just walk you through some things. And then please like and subscribe if this has been an interest to you. And till next time. And if you have something you would like us to cover and be able to share our knowledge and maybe some experience that we've had, please let us know. We appreciate all your comments, your emails, your text messages. All of that is great, and we thank you for it. Anything more, Jerry?
I think that'll do it. We've covered everything I wanted to talk about.
Yeah. Hit the subscribe button.
Absolutely.
All right, then take care. Thank you again, Jerry, for meeting with me.
All right. Thanks, Kim.
All right, take care.
Bye bye.
Bye.